thank you for having me, Franchise India, and both Gaurav and Ritu, wherever you are. Appreciate your inviting me, and I'm delighted to be here. So I come from Angel Investor Group. It's the largest, I think, first in India, but now Asia's largest. We've also set up in the UK. And before I go to the next slide, I wanted to just spend 1 minute what angel investors are, because it's a common question that comes to me, and it might be useful. Typically, angel investors are people who have been entrepreneurs and been successful entrepreneurs and created wealth for themselves. And because they've understood the power of entrepreneurship, they now invest their own personal monies into new young companies and startup companies. So they are really investing their own money, number one. Number two, because they have been entrepreneurs, they understand the problems, the issues, the concerns, the operational issues that come up in creating a new venture, and therefore they help with a lot of mentoring and advice. And they actually really walk side by side with the entrepreneurs post-investment. And third, because they've really created very large global companies, and people like Chris Gopalakrishnan, Sanjeev Bikhchandani of Naukri, Raman Roy of Spectrum and Quattro, Saurabh, all of these guys have created companies which are large. They have a lot of global networks, so they are being able to provide that market access to young startup companies. And the last, which is very angelic, is the fact that they bring a lot of credibility into their companies. So for young startups, young entrepreneurs, they suddenly become somebody's company and the doors start opening, and there's a lot of trust. So I think that primarily defines what an angel investor is. The second definition that I wanted to also share with you, that angels tip, because this is a conference where we have various types of businesses, and angels typically invest in the equity of a company, in the shares of a company. They do not provide debt, number one. And number two, they don't look at getting dividend as a return to their investment. What they are looking at is that the value of the shares as they increase, and they can sell those shares at a certain point in time, that capital gains or that increase in the price of shares is where they make their returns. So keeping those two in mind, I thought it would be more relevant as I went to the next steps. We are 325 investors around the world from 10 countries actively investing. About 90% of our investors have been investing. As I mentioned some of the names earlier, we've really got probably the best investor table. We also have some of the corporates who are investing, like Google, Intel, Naukri, and of course the venture capital funds like Sequoia, IDG. We are operational. We have pitch sessions in 6 cities in India: Delhi, Bombay, Bangalore, Hyderabad, Pune, and Calcutta, and now of course in London. Till date, we have done 70 plus investments in 7 years, and across 15 sectors in 7 countries. And what I wanted to also share is that we don't invest only in technology companies, but we do invest in execution plays. So we've recently invested in a spa chain, which is called Tatva Spa. We've also invested in companies which are in manufacturing, which is an automatic dosa making machine. We've invested in a quick service restaurant chain called Box 8. So just for people who are not technology and are more on the non-technology side, just to give you an idea. Education, we've invested. Medical devices, we have invested. To give you some sense, we are very, very active investors. Sunil was just telling me, I don't know how you manage, but we did 18 investments last year. This year till September, we've done 19, and I think by the end of the year, we should touch quarter century. We give nice returns, which means that the entrepreneurs, our companies are doing very well. They are growing very well. So companies have grown to an extent which have given almost 70 times returns in about 7 years. They've done 18 times in about 4 years. So very, very nice growth path. And there are majors from all over the world who are investing and picking up our companies after us. We do have an incubator, by the way, and where we breed young companies and then take them on to the investor level. But that's just a point which I wanted to share. As I mentioned, this is very high quality money because this is post-investment, personal, post-tax personal money, and therefore it is very valuable to the investors, but I think it becomes even more valuable to the entrepreneurs. Because they invest their own money, they do engage with the entrepreneur and help mentor them. They provide a lot of advice, they provide a lot of networks. One of our companies, we actually brought NASA into the company, and which has now really changed the whole complexion. We've helped grow customers from 4 to 16 in a period of 8 months across 3 cities. So that's the kind of help that we provide. Because we are an investor group who are really corporate honchos, actually, who are angels. So you have Pramod Bhasin, who's the head of Genpact, or you would have Jerry Rao, who's now doing a real estate business, or Rajiv Arora. A lot of these companies, a lot of these angels, they are also sitting as heads of companies. So those become actually potential clients for our investee companies. VC connects are there, banks we approach and help with debt, and obviously a lot of the government interaction which goes to help the entrepreneur. So just to give you now on what we look for, so this is just to leave you with this. So what does an investor or an angel investor look for, which is probably what is more relevant here, is I think what we look for is a proposition. What is the product or the service that the entrepreneur is bringing to us? That's the first question that we ask. Is it something which is a need to have or a nice to have? Let me explain this in a minute. So many of you would have heard of one of the boutiques, you know, like a Ritu Berry or one of those boutiques. They sell very, very nice outfits. But typically these are very, very expensive, and they are something you would like to have. I'm sorry, something happened. You would like to have in your wardrobe. It's not a necessity. But when you go to a Kishore Bayani's Big Bazaar and you buy your ready-made stuff, it's a need to have. You need to have a shirt, you need to have trousers, you need to have the clothes that are there, and the price point is very different. So investors of this kind invest in companies where the product is a need to have and not a nice to have, because that's where a large market exists. That's the difference between a boutique play and a large market play. The second is that they look for a differentiator. Is that proposition doing something different or differently? Think about the BPO industry. I think most of you are familiar with that. The BPO industry did nothing different, but it did something very differently. All it did is go to the companies and say, whatever you're doing on your accounting side, on your HR side, can we pull that out and do it for you? So the companies got the same service, but they just provided it differently. That's important, right? The mobile is another example. You can make a call wireless, but you could speak differently. So doing something different or differently is important for the uniqueness of the proposition. And third, there needs to be a customer. If there is nobody who's going to pay for that product or proposition, nobody is going to buy it. Again, let me give you an illustration. Some years ago, there was a young entrepreneur who had shown me a device which you could fit on your cycle. And with that cycle, could move faster with lesser effort. And he was very excited about it. It was in Kharagpur, I remember. Now, when I asked him who's going to buy it, he says, ma'am, it costs 4,500, rickshaw wala khalid lega. I said, kaun sa rickshaw wala? He says, wo jo cycle rickshaw chalata hai na wo. I said, uske paas paise kahan hai? Wo to 100 rupiya dihadi pe rickshaw rent pe leta hai. He says, हाँ वो तो प्रॉब्लम है, वो तो नहीं खरीद पाएगा. अच्छा जिसका रिक्शा है वो खरीदेगा. I said, but वो क्यों खरीदेगा? उसको तो फिर भी 100 रुपया पर डे मिल रहा है, तो हाँ वो भी प्रॉब्लम है. So he is also not a customer. Ma'am, I'll go to the manufacturer and I will get this fixed in that rickshaw, and they will be able to absorb the cost. Why would they do it? How would they sell that extra cost? How will they price it? So he finally figured out that there was no customer. So having a customer who's going to finally open his wallet and pay for that product is extremely important. The market, as I said earlier also, has to be a high growth market. Sometimes competition is a good thing. Having no competition is not a great idea at times. And you see that in over and over and over again. So, very common thing. If there is no competition, that means you as an entrepreneur has to educate the customers, which is a very long ramp up process. So think about it, but you need to also have, as an entrepreneur, a well differentiated proposition against your competition. To us, from an investor perspective, having a nice presentation, having a nice product, understanding the market. So I think from an investor perspective, the most important thing is the execution on that venture. How is the product going to be built? How is it going to be delivered to the customer? How is the payment going to be collected? What happens if there is a warranty required? How will the whole thing work? Because unless you do, how will the vendor chain work? Execution and delivery is extremely important, because you can do an extremely good marketing, you can have a damn good sales system, you can acquire the customer, but if you cannot deliver to him, he's not going to pay. And if he does not pay, there is no revenue coming into your account, and therefore you don't have a business. So delivery to us as an investor is something we are very, very keen on. And that gets diligenced, I think, the maximum. How are you going to, in many of our investor sessions, the discussion is really, how are you going to deliver? What happens if this doesn't work? How are you going to do after sales? How are you going to package it? How are you going to price it? Why is your pricing model like this? How is he going to pay? How are you going to collect? I think all of these things become extremely important. It's common sense, I do appreciate, but all I want to highlight is that is probably the key to any venture. Something like a spa, as I just mentioned, we had invested in Tattva Spa. Actually, it can be very easily replicated. The only thing that it will differentiate it is how the team executes. How well is the quality of service? How can they retain their team? How can they create the ambience that they want? Unless they have that, they're not going to be able to have customers. At an early stage, really, there is nothing. When we see in business plans, we actually see very little product there. We don't see any business. Typically, we have entrepreneurs who come to us who don't even have their first order or customer. They don't have the first revenue. So what is it that we look for? We basically look for the team. The bet is on the horse. It's as simple as that. The team has to be really, really powerful. It has to be very execution focused, needs to understand its domain, needs to be able to build a team, needs to be able to bring in customers. And no one person or a co-founder team can do everything. We appreciate that. It's not something we don't appreciate. But can he bring what is required? Can he bring other members of the team who are required to execute on that venture well? So the team becomes extremely important. And in a startup phase, very often businesses do fail. Situations, environment changes, and it doesn't work out as the business plan said. What do? It is the team which can pivot and change its strategy and come up with a new model. I don't know how many of you have heard about vendors. Has anyone heard about vendors? Yeah? Only 1, 2 people? Okay. So vendors is basically an investment advisory firm, and it is in the technology space. They are advising software and technology companies. The reason I brought this up is when vendor started in 2000, the .com era, right? They started as coolstartups.com. What they had decided is that they would put a web, bring in all the startups who want to raise money, and bring in all the investors who want to put in money and connect them. Then came the dot-com bust. Nobody was looking at dot-coms. All the dot-coms had gone underground and they had lost all their money. But because it was a team which could think, they locked themselves up in a weekend and said, now what do we do? Do we give up? Go look for a job? What do we do? They then strategized with their board members and figured out that there is a space in the technology space where they can do exactly that. Help young technology companies to raise money or merge or get acquired. And that's where Avendus was born. And they chose the name Avendus because Accenture walked into the country at that time and they were saying, okay, we need a slightly corporate name, cool startups doesn't work. So that's how Avendus was born. But the moral of the story is it's because it was a very, very good team that they could pivot. Otherwise the business plan was over. So team is, I can't emphasize this more, that the team is extremely critical for us. A lot of entrepreneurs come to us to say, I've spent so much time on financials, I've done everything, please check this formula, please check that formula, which is fine. I think it's necessary, but it's necessary in the later stages of diligence. Initially, when we look at financials, we just look at it as a mirror for the operations of the business. For us, it's one slide which gives us a very good idea as to how is this entrepreneur thinking? How detailed has he gone to? What is his ambition to grow the company? How much money is he going to require? Is his cash flow does make sense or not? Has he taken each item or not? I think those are the things that we are looking at the initial level. I must say, and I must ride it to say that as we go into the diligence, the financials do become important and we do a deeper dive. But when you come to us as an entrepreneur, we don't look at it as all done and it's ready and we are ready to invest. It just gives us an idea of where the company is going. And the second thing on the financials is something which I have experienced. We get something like 5,000 business plans a year, and when we do a business plan competition, we get 20,000 a year. I think a lot of entrepreneurs come to us to say, oh, we can do with 1 crore se 3 crore ke beech mein mil jaye to chalega. That's 3 times. That's 300% requirement. It doesn't make sense to me. So if you are a serious entrepreneur, then you need to know how much money you need. Now you can go up and down by about 10-20%, that's fine, we'll come to that. But if in your first interaction with us as an investor base, you say from 1 crore to 3 crores, it tells me, I don't think you know your job. So, these first impressions do matter. They do matter greatly. And it sets the tone for your interactions. We will change, we will discuss, we will diligence, there will be lots of strategic discussions, that apart. But in your first interaction, let's be clear, let's do enough of homework to get your numbers right as far as you can. Do research, talk to peers, talk to competition, talk to whoever you need to. But believe me, it is the first impression that does make an impression. And I get this very often, so I'm sharing this with you. How much valuation? Ma'am, 25 से 40% के बीच में मैं दे दूँगा. Hello, it's your product. The venture is yours. You decide what you want to price it at. I may then negotiate, but at least you should have a price in your mind. Not having something priced which is yours tells me how serious or unserious you are. So I think, considering what was shared with us in the program, I thought I will just bring this in a very concise form. And the last point, which I probably have mentioned somewhere, is please, in an early stage startup, risks are inherent. So identify your risks, think of how you will alleviate those risks and share them. It just gives the investor group a much better idea of the detailed, deep thinking that you may have done. And considering this is a Franchise India conference, I thought we will have these questions. So do we as investors look at franchising? Do we invest in them? So from our perspective, franchising projects a very, very good way of scaling up. Okay? So if you have a business which you plan to scale up through franchising, we are very happy to look at such businesses. However, if there's a franchisor whose franchisee you want to take as a franchisee, that's probably not something we as our investor group would like to look at, just so that that's clear. Because the wealth and the value sits with the franchisor, where we as an investor group want to sit. That's just the kind of investors we are, and there are very many investors and bankers who would be happy to fund also franchisees. So just from our perspective, I thought I'll share that. If you are creating a venture which you want to later franchise out, I think it's very, very important for you to build the IP, which is really what is your core product, what's your core service, the processes, the formats, and have proper control on those. So that is a controlled package that you can then give out to franchisees. And it's very, very important to do that. I myself have been involved in a franchise where we franchised something out. And unless we had that control on the package and we had the quality in our control, it just dissipates. So it's very important to build that package of software, if I may say, to make sure your franchising does not take away things. Third is how do you architect the commercial package for the franchisee? It's very important. You need to give him enough so that he's empowered, but you need to hold on enough so that you get back. And that is something which you should think, and probably you're at the right place with Franchise India, which can help you think through that. But the commercial structuring becomes very important. Fourth, which we suffered, and I'm sharing this from my own experience, I think we were very weak on collecting revenues from the franchisee. And we had a lot of debt write-offs that we did. So from there, please make sure, because your execution you're passing on to the franchisee. He's going to collect the revenues. How do you collect from him is very important. And that's something that you need to create as a risk mitigation model, a penalty model, escrow models. There are lots of models, but do think about it. We do look at teams which have domain expertise, but if you are franchising out, what we would look in the team, which is very critical, is somebody who's built a franchise network. Because then he is the one who understands how to build that network, how do you relate to the franchisee, what are the issues of the franchisee, what's the collection model, and all of what I said earlier, he's the one who would know that. So it's pretty important in your team, if you're thinking of franchising, to start embedding somebody from that understanding. And it's good to do it early, because a lot of the foundations of your company will be built on that model. And last, which is very important, in terms of franchisors, okay, it can be a very nice lifestyle business, right? So once you've done a good franchisee and you've executed very well, it can make your life. You can continue this for life. But we as investors don't want to continue with you for life, right? We want to exit at some point. That's our whole model. We want returns on our share, which I said right up front. So somehow in your whole model, you need to think through that if you're raising money from investors like us who invest in shares of the company, how are you going to give us investors? How are you going to give us exit or returns? It's very important. So that is on the franchising. And the last thing that I want to share is, investors like us who are investing in the equity of the company, which are angel investors or VCs, venture capitalists, we get into a marriage with the entrepreneur, but that's the beginning. But when we get married, what we look for is a divorce. We never want to remain married. We want a divorce. And we want a divorce with a very good alimony. Okay? So you need to think through this. We don't want to stay there forever. We make a very bad couple. But we want a very good alimony. So on that note, best of luck.